Do you think, broadly speaking, that the April rally went too far? And where are we now in terms of your risk-on, risk-off radar?
Good morning, Anna and Matt. Yes, certainly, I think April's market recovery was overdone. I think it was a classic case of a bear market rally. So in other words, we saw the prices go up, we didn't see the volumes, and we didn't see the investors following through on the back of that. So I think that left us at a difficult position. And then what we saw last week was a growing realization that the V-shaped recovery is a fantasy, to use someone else's words. But I very much see that path. Think it's going to be much more difficult. And so what we were seeing last week is corporate news and economic news, which was steeping on that and suggesting that recovery will be delayed. And I think now we enter this week at a very interesting time when we clearly have two sides of the argument. So you still have some people believing that 2021 will be okay. If you look at the earnings, some people still very much believe in a quick bounce back there. And then increasingly you have a lot of other people, including Powell, as you said, who say it's going to be much, much more difficult. And that would be the line that I would take. And the fact that from here to see another big leg up, you're going to need a health solution.
Is it not? So you're going to need a health solution. You don't think a stimulus solution will suffice, Rebecca? Because you could look at Powell's remarks as an attempt to focus the minds of Congress and get another fiscal stimulus package out there.
Well, I think, clearly no one's going to say no thank you to more stimulus, but stimulus can only go so far. So the stimulus we saw in March, it meant that we reached a bottom in the market. We're not going to re-see that bottom. And what it did was mean that we're not going to have a liquidity crisis. We're not going to see the financial crunch we thought we could see. Stimulus from here could save the economy, but it doesn't necessarily lead to demand and to earnings growth. You only need to look at what's happened in China, whereas on Friday you saw industrial production figures rise, but retail sales still very low and still falling, to see that the stimulus isn't necessarily going to feed through to corporate profits.
Rebecca, I was looking at the Fitch moves from Friday, and they kept the rating on France unchanged, but they changed the outlook to negative. How much do you think markets are still vulnerable to this kind of ratings movement, or at least ratings movements when they come? Is the European investment story dependent on those kind of ratings, or can we look through that?
I think in a sense, I think investors are expecting difficult ratings and worse to come. So I think that's almost in people's mindset. And if you see the sheer amount of underperformance of European equities against US equities, I think some of that is already baked in. We've already assumed the European economy will be harder hit and will take longer to recover.
So you think that Europe is going to take longer to recover because of the... Is it possibly because we have the lack of sort of the cohesive federal government response that the U.S. can count on?
I think it's more just because of the makeup of the economies. Because, you can break it down into stimulus and return to work and reopening of economies. But actually, one thing that's really worked in the US favour over the last couple of weeks has been the size of the tech sector, the size of the healthcare sector, whereas in Europe our largest sector is financials. If one plays one off against the other, then most people want to be with those large names, those cash-rich businesses. And that's one thing that will continue to aid the stock market, not necessarily the economy going forward.
How damaging do you think the rate of unemployment in the US is going to be for the US recovery story? Rebecca, I was looking at some research by Bloomberg, said a fifth of American workers, so that's 36.5 million, have filed for unemployment since the middle of March. We know those statistics, but apparently millions of those are still waiting months later to get hold of the money that they are due. This is going to take its toll, isn't it, on the US economy?
Definitely. And so I think, even though I said that the US is better placed than Europe, I'm not saying that US is in a good place either. I think that we've been underestimating the economic impact, and more than that, we've been seriously underestimating the impact on corporate earnings. What you're talking about there is disruption for months and months to come. We may have seen a hit to 2020 forecast, but that bottom-up Forecasts are still not reflecting what people are saying top down, and we've really not seen any adjustment to the 2021 forecast yet.